Last year, over 6,700 millionaires moved to Dubai. You've probably heard that all over the news, and that's actually more than any other city in the world. People think that it's all about the sunshine, the supercars, the materialistic stuff, the low taxes, but that's not why they're really coming. I've spent years now helping high net worth families, restructure their wealth from Europe, UK, and then into the UAE. And you see, what we're seeing right now is one of the biggest wealth migrations in modern history. And the truth is, these aren't just quick investors. They're people who have spent decades building businesses, and now they're being forced to choose between higher taxes or greater freedom. And if you're building serious wealth, the shift matters, because moving to the right jurisdiction, it could save you millions, whilst also the wrong way could also cost you as much. So in this video, I'll break down why expat millionaires are really choosing Dubai and the UAE beyond the 0% tax headlines, the smart way they're structuring their wealth for long-term control and also protection. And I'll also have a live example of a client I have right now on what portfolio he is holding, how you can apply the same strategy safely if you're thinking about making the move yourself. But before we talk about the UAE, we need to understand why so many wealthy families are leaving the West in the first place. Because what's driving them out is just as important as what's pulling them in. Most people are thinking now millionaires are just moving because of the zero tax lifestyle, the Palm Jumeirah, the sun. But the truth is that's just surface level stuff that you see in the news. What's really happening is quite obvious. It's a collapse in the trust between the governments and the people who actually fund them. I've got countless stories of clients whose families emigrated to the UK in the 1900s, built successful, long-standing family businesses, only to now be put in a position where they're getting pushed out. The taxes, the capital gains, the red tape, everything that you want to do to push a millionaire out is happening. And these people are forced to sell their businesses. Oh, and of course, they're getting taxed on that too. So what's happening, we're seeing all of the people who have actually kept the economy afloat, people who have logistically done things, to build Britain and the UK to what it is now, forced out. And that's why now we're seeing this huge influx of people moving to the UAE. And I get it, right? It might not be for everyone. It's definitely not for everyone. There are certain people that move back. They come to Dubai, they realize, or Abu Dhabi, and realize, you know what? This place wasn't for me. I didn't really suit this lifestyle. This is not what I want. And that's fair enough. But just as many and definitely more people are staying for the long term. And you know what? I'm not here trying to put the UK down or not feel proud to be British, because I truly am. It's actually very sad what is happening right now. And seeing the West decline as fast as it is begs a question. What is really going on? In the UK, France, Germany, even parts of Canada, the middle class has been hollowed out. Inflation is running faster than salary growth. The tax net, it just keeps tightening. And I mean, listen, regulation is choking entrepreneurship, let's be honest. Business owners, family offices who have built their wealth over decades have realized they're being punished for success. Higher capital gains, inheritance thresholds, and now governments openly talking about wealth taxes and exit taxes. At this point, it's not even paranoia, it's policy. They're not running from tax, they're running towards freedom. Freedom of movement, freedom of structure, freedom to live, without constantly being monitored by the government. That's essentially broke, and it's looking for new revenue sources. Even the money you pay for tax does not make you feel safer. The West is aging, it's overregulated, it's politically divided. The Middle East, especially the Gulf, you could almost call it young, ambitious, and it's aligned with the vision of growth, right? Now, once these families start exploring options, they quickly realize there's only one place that checks nearly every box. It's no longer easy to emigrate to Europe. There's not really many other places in the world that you can do what you can do, like Dubai. People still think the UAE's rise is a marketing story, glass towers, supercars. What actually makes it powerful is system design. You can open a company within a week, own it 100%, make profits freely, operate in a time zone that connects to Asia, Europe, and Africa, politically stable, legal clarity, safety, connectivity. That's what global families value now more than anything. Let's say unlike Switzerland and Monaco, Dubai is actually a place to park wealth and grow it. The economy is expanding across AI, logistics, and real estate. You can be a full resident, build tax efficient structures, and still fly anywhere within 6 to 8 hours that you need to. And listen, I've spent hundreds of hours tracking this wealth migration trend. Who's coming in, what areas they're buying, how they're structuring assets. So if you want to stay ahead of that curve and figure out what's best for you, join my WhatsApp link in the description. But here is where most people go wrong. They finally relocate, but they don't structure properly. They just assume being in Dubai automatically means tax freedom, and it doesn't. And automatically, if you buy something, it will make money. It doesn't. You see, under the UAE law, if you don't have a valid will registered in appropriate regimes, such as the DIFC will service or, the correct one in Abu Dhabi, and your corporate foundation or foundation vehicle isn't properly structured, your UAE-based assets, well, they risk being distributed under the default succession rules, which historically derive from the Sharia principles. That just means that your estate might not follow your bespoke plan. It might not go to the right person. And I've seen families, with a lot of assets who didn't set this up properly. And it's not too much of a problem if you just catch on to it early. So that's why serious investors, set up these proper foundations, these trusts, and, we do have great teams of people that can help with this. And it's not about avoiding taxes, it's about protecting your wealth, protecting your freedom, protecting your structures, so that for the long term it makes sense. Now, let's talk strategy. We're gonna get into a whiteboard session now because the new generation of millionaires are coming here and they aren't just buying mansions on the palm. All right, they're playing a different game. One built on longevity. So I wanna talk about the positioning of wealth. I've just split it up into 3 categories. And of course, this can be a lot more detailed, but this is to give someone who may not know so much about the market and give them a really strong idea, right? You've got capital preservation, meaning somewhere where you can park your capital. Maybe you're an end user looking to relocate to Dubai. And of course, the main thing here is when you purchase a property, you don't want to see an asset that's going to devalue over time. There are videos out there where people are talking about the bubble bursting, there's a big crash incoming. Even I've talked about that, but you have to just be smart about which segment of the market you're putting your money in. And that's why I always highlight master developments, because even if the market did take a turn, you want to be having and owning property in areas where people aren't necessarily going to be scrambling to leave. Properties that are heavily reliant on Airbnb, holiday homes and things like this, they're the ones that are going to take the hits first. People generally in the city, when sort of shit hits the fan, are the ones to escape first. But families that have established themselves in master developments, we've seen it, happen multiple times. People don't just up and leave. They've relocated their entire families. They've set themselves up. They've got their kids into school. They don't just, it's not just as simple for them to up and leave, rather than like a single individual whose company starts to take a hit because of the world economic crisis, right? You see where I'm going with this? So the capital preservation is in master developments. Now, we can categorize that in many different ways. You've got Emaar communities, Nakheel communities, Miras communities, generally places where we see fit, like, standalone villas in areas where there's close by to schools, proximity to malls. I live in Dubai Hills, that's a perfect example. We've seen gradual appreciation. We've seen a bit of stagnant growth in the apartment sector in Dubai Hills. But then if someone's, not necessarily looking for somewhere to live and they want capital growth, well, you've obviously heard of off-plan, and I've spoke about renovations many times on this channel. Now, off-plan is not what it used to be. That goes without saying, people used to buy off-plan, double, triple your money in 12, 18, 24 months. That doesn't happen anymore. Okay, you have to be a lot more selective. And on the next slide in a moment, I'm going to give you an example of someone who I work very closely with and show you where their portfolio is actually diversified across, because it's very interesting. And in my opinion, it's probably one of the strongest portfolios that we're managing right now. In the off-plan sector, it's about finding unique opportunities from flagship developers, bringing something unique to the market where there is a big demand. We've got places like Business Bay, which is a very in-demand area, by the way. A lot of footfall, a lot of commercial space, but there's also like a lot of studios and one-beds. And that takes up a huge segment of the market. And in terms of growth, it doesn't take you 5 minutes to go and actually see. There's a bit of a stagnant growth period in the past 12 to 18 months in this category of the market. And not to say there's also over like 8,000 studios and one beds come into the market in the next sort of 18 to 24 months. So we're going to see another huge influx of the same type of product in not so special developments. So for me, this is where I see stagnant growth in the market. So again, it just comes down to strategy and how you position your capital. And that's where we come in and sort of help you with that. And then of course, cash flow. So everyone talks about wanting big cash flow. Again, you look in Dubai, everyone talks about 8, 9%. That's changed a lot, properties I sold back in 2021, 2022, and even 2023. The prices have changed quite considerably. And a good example is JVC when it was well priced at 800K for a one bed. All right, now you're talking 1.3 million. And yes, the rents have gone up, but also stagnating a little bit as well in these areas. That's why I personally don't focus on these urban communities. I focus on the more luxury segment of the market where I see more value being added to these properties, because now it's just getting a bit more difficult. But when it comes to cash flow, because of course that's what we want to help with, we look at commercial properties, and we look at where we can see key Airbnb locations. Now, commercial's an interesting one, so you can still buy into the commercial sector in the pre-development phases right now. We've been building reports for certain projects in the market, which I find are very exciting because there is a massive demand for grade A properties, all right? Dubai is not a work from home type culture. That's what I see. And you do have a lot more companies relocating. By the end of 2025, there'll be over 70,000 new business licenses in the city alone. Now, that's not to say, obviously, 70,000 people are going to need offices, and there's probably a lot of that are going to be worldwide, but a couple of percent of that are going to need offices. And there's not a lot of grade A, well-designed luxury office space. So then obviously Airbnb, because this is always going to be a big model, right? Wherever you are in the world, there's always going to be a demand. I've seen a lot of people expecting Airbnbs to work, and it's about what price you buy into the property. Everyone just associates Airbnb with like 9%, 10%, 11%. But then also, if you're in a location where you're competing against hundreds, if not thousands of listings, then it's going to be a bit of a race to the bottom. Like, we've seen this in various areas, and it becomes a little bit of a problem because, you know, your bookings are really low, things aren't getting rented out, and then, you know, you're still paying your service charges, you know, you're still paying your electricity, water, and gas, and all that kind of stuff, but you're not making any money, all right? And it's also, you know, you do get more, you know, charges from property management companies and stuff like that. So this is just to give you a broad overview. And again, when we go on to this next page, this is where it gets interesting. You've got 3 villas, okay, all in master developments. These 2 are off plan. If you've done any research in the Dubai market, you know Emaar Oasis is quite possibly Emaar's newest flagship product. I mean, you've got other great master developments they are building, but the Emaar Oasis is set to be, you know, one of the most incredible. It's a lagoon-based community, all standalone villas, huge spaces for greenery. And the particular product this client owns is a 5-bed with basement, over 10,000 built-up area, over 10,000 square foot plot. And this is assuming that the property only goes to 2,800 dirhams per square foot, which, I mean, if we look at Dubai Hills, it's gone well above that, like 3,200, 3,400. It's an average ROI based on paying the full thing off, which was 18 million. You know, we're talking like 44% on the capital in 3 years, which is over 14% ROI per year. Then we've also got Hudayriyat, which is waterfront community by Modan in Abu Dhabi. I think as an investor now, you want to be looking at diversifying your portfolio across different Emirates with the right investment strategy, okay? And then also we've got Arabian Ranches, which is a renovation, okay? So you can see here, 3 years, 3 years, 10 months. Now, the idea of this portfolio is that, I mean, first of all, these are very conservative numbers. I think they're gonna do a lot more. Also, if these properties were sold before handover, the return on equity would be way more substantial, especially like Hudayriyat is on a 40-60 payment plan, you know? Now, the idea is that when we, you know, look at purchasing these types of properties, we have a strategy in mind. It's not just, oh, go and buy this, oh, go and buy this. It's like, no, okay, we know we've got a certain amount of capital, a certain amount of cash at hand. And we know that these 2 projects are gonna be, you know, it's gonna be 3 years before we make any substantial money. We can try and say we'll flip before, but let's be honest, Dubai market is very, you know, affluent, but also you have to just be a bit more aware that there's a lot of competition. So waiting for these communities to be developed where people can see the bricks and mortar, that's when you make the real money. But with the Arabian Ranches, you know, that's a project that we are renovating right now. So what we can do over the next 10 months, we can make an 18% return. That's a, you know, net to the owner, all right? Or it could be even more, to be honest. But, you know, this is on the lower end of the luxury market in terms of a renovation. But then on the next project, you know, we might step it up a little bit and go for an Arabian Ranches. We could even go for something on the golf course, you know? We could go for something on the lake. And what does this mean? Well, this 18 might become 24%, for example, okay? So the idea is that, you know, we flip, we add value, we resell, now we've got more capital, we do it again, and each time we go bigger and bigger and bigger. And then over the next 3 years, we're waiting for these 2 incredible projects to be built. So over the next 3 years, we'll sell 3 properties that we've bought, renovated, and flipped, partially use some of the profits for each of these and allocate a certain amount of money to this. And then all of a sudden, these 2 properties are ready. We can refinance them. We could resell one, use that capital, combine it with the Arabian Ranches capital that we started with, all right, from the renovation money. Then we might have like 40 or 50 million to play with. And then we can go into more premium locations, Palm Jumeirah, Al Barari. So the idea is that we don't just think for the short term, we're thinking for the long term. What is the long-term strategy? Let's map it out. Let's have a brainstorming session. We want to make 100 million in 5 years. Okay, cool. Let's reverse engineer that number. Let's do that, because this is very possible in this market if you just know how and know what to look for. So yeah, this is what we do when we build strategies. And like I say, each person to their own sort of standard and what they want to do. But that's why it's more important than ever to just be working with consultants in this market that you can trust, who actually have the ability to sort of read between the lines and see where the real money is being made. Now, if you're still chasing the quick flip era of 2021, you've already missed it. The next chapter of the UAE Wealth is about structure, timing, and alignment with where the region is going, not where it has been. That's why I say to everyone, the last 3 years are not going to be the same as the next 3 years, but you just need to be smart. And here's the reality. Moving your wealth doesn't mean you move your life. Most expats underestimate how strategic you need to be with lifestyle design as well. First of all, to qualify as a tax resident, you need to spend around 180 days per year in the UAE. And let's say you're in the UK, you can't go back for more than 90 days. So it still leaves flexibility. Let's be honest. I'm not going to sit here and say Dubai is a great place to be all year round. The summers get tough. The summers get hot. Quite unbearable to live at times. Now imagine you can build and map out a lifestyle where you spend 6 months of the year in Dubai, 3 months in Europe, then you could even go back to the UK for 3 months, or you could spend a bit more time elsewhere. Now of course that's not possible for anyone, but it's about building your life intentionally. Map out your residency days, use your travel calendar. Understand your business operations, because wealth without clarity, it becomes a little bit chaotic, right? Now, finally, Dubai isn't for everyone. I like to reiterate this because everyone is just thinking that we paint pictures to sell more properties, and it's not like that. If you need a constant handhold, and if you're chasing hype, or you can't operate outside the comfort of the old Western systems, you will struggle here. It's more expensive. It's harder to get your head around at first. Dubai rewards the builders, the disciplined ones, the people who take ownership of their life. At the end of the day, where we're at right now, the West is collapsing under its own bureaucracy, right? Dubai is thriving because it's obsessed with progress. This is a place of growth. The question isn't whether Dubai is right for you, it's whether you're right for Dubai. Now, when I first moved here, it was very tough, didn't really get my head around it, but guess what? I made it work. And now I also help many expat investors and families relocate and structure their wealth assets and build property portfolios in this amazing country, the UAE. Between Dubai and Abu Dhabi, we've sold millions and millions of dollars worth of properties, and we're here to help. So all is what you want to do. If you want to actually get in touch with me, just feel free to book a call where we can talk about structuring your assets, structuring your wealth, and see what's right for you. I look forward to seeing you on the call and the next video.